Howdy, hotshots. It's the Dividend Daddy, your favorite, not a financial advisor with not financial advice. Here to report on the huge ULTY crash today. Man, people are losing their minds. They are like, oh, it's doomed. It's going to go to the floor. It's going to completely total to fund. Yieldmax is a scam. ULTY is trash. Excuse me. It still has stocks as the underlying, okay? It can't defy gravity. All of my funds are down today. Ulti was down 1.6%. VOOG and VGT, I had those, they were down 1.5 to 1.7%. Even SCHD with its measly 4% yield was down close to 0.4% today. What do you want Ulti to do? You just want it to go straight up and pay an 80% yield. So you want it to have high implied volatility so that you can get that ultra high yield that we're getting from it, but you expect those stocks to just go straight up. Well, guess what? If the stocks just went on a trajectory north and all they did was just slowly climb that mountain, you wouldn't have the volatility and then you wouldn't be able to get the 80% yield, okay? We all know that this is a riskier type investment, and we're taking that risk to get outsized gains, okay? So if on a day when VGT and VOOG are down 1.6%, Ulti is down 1.6%, that sounds like a gigantic win to me, okay? I mean, obviously, it's not going to go up as fast as VOOG or VGT because you've got capped upside potential because they've been selling those covered calls, okay? And anybody that understands anything about options, which I understand, a lot of people that are investing in these funds probably have never traded an option in their life, okay? But if you don't have a volatile underlying, then you can't get the implied volatility of the stock up high enough to give you any good premium on a covered call. That's true with cash covered puts. That's true with covered calls, okay? You have to have a volatile underlying. And that's why you'll see the underlyings in Ulti are a lot of tech stocks for the most part, okay? Because they're volatile. That's why Misty pays such huge distributions because it's tied to a fund, it's tied to a stock that owns a bunch of Bitcoin, and we all know Bitcoin is volatile. That's what keeps people from investing in it a lot of times. It's this huge swings up and huge swings down. But over time, it has paid off tremendously. Okay, and that's what we're looking for out of Ulti. Now, if you thought you were going to take $100,000 and put it in Ulti and just get $80,000 a year to live on, and then never see the share price go down, I mean, in what world are you living in? Okay, that's not how the stock market works. We all know that on a very short time frame, stocks go up and stocks go down. On a long time frame, an index full of stocks is going to go up. Now, if you bought an individual stock, obviously it could go bankrupt, or it could just go sideways, or it could go down and then back up to still less than what you paid for it. So you can't look at individual equities that way. But if you look at an index fund, that's how it works, right? What do they say? You take the stairs up and the elevator down, okay? So we saw what happens when the elevator goes down back when they were talking about all those tariffs, okay? And then for us, that was kind of a V-shaped recovery in a lot of the indexes. And right about that time is when Ulti had a lot of changes within their fund. They changed the way they were managing it. They went to weekly pay. They started using cash. They started using puts to help hedge the positions within Ulti. And they really started trying to get the distributions level, and that kind of leveled out the fund. You could see that it climbed out of the mid fours back up into the mid sixes, and now we've had a rough week, okay? I bought shares at $6.40. I'm not going to come on here and tell you that I just know how to perfectly time it, but what I will tell you is that, just like I told you in the last video, I am okay with it going down a couple percent as long as it doesn't just keep going down and keep going down and keep going down. Now, I'm Mr. Diamond Hands over here, okay? I ride things forever, so I will probably run it into the ground even if that's where it goes, okay? I'm not going to tell you that I always make the best decisions, so don't do what I do. But if you want to know what I'm doing, I bought 500 more shares of Ulti today, and I was so stoked that the distribution came out on a day when the fund had taken a hit, which we know that on X day, on X dividend day, the fund will go down. And for some reason, psychologically, as far as I could tell, because it really doesn't change the value of the fund, is that when the dividend is paid, then the fund has seemingly gone down as well. I don't know. I'm assuming that's a psychological thing. What it could be is that as soon as people got that distribution, then they sell out and they go somewhere else. What I think happened today, the whole reason that it was even able to dip below $6, and I think it got down to $5.95 at one point, and man, I wish I'd have picked up my shares there. I bought my 450 shares for $6, and I bought a chunk of them for $6.03, and then I bought another chunk of them for $6.02. I don't even know, because it's like if for every 100 shares, you're talking about $1. And so I was sitting there watching it, trying to get one of them down to 601, and it wasn't happening. And I was on my break at work, so I was like, well, I got to go back to work, but I don't want to just wonder if this is going to hit my limit order. So I just upped it a penny so that I could make sure that I got filled, because I was buying 400 shares, and so it's like $4. I'm not going to sit there and stress out about whether my limit order is going to get filled, because I go into work and then I come back out and it goes back up to $6.15. Well, now I have to pay an extra $60. I don't want to do that. I'd rather just pay the extra couple bucks right then and be done with it. Now, if I had come back out after buying my 400 shares and it was at $5.95, would it be frustrating? Yeah, sure. But you know what I would do? I would buy even more shares, because I just keep buying it all the way down and I'm getting a better yield on those shares. Like we were talking about an 80% yield when it was $6.40. I'd have to check the math, but I think so today the yield is somewhere around 86%, assuming the distributions stay level and you were able to get it right at $6. So I had a friend on here that was saying that he had a stop loss at $6.12. Turns out maybe that was a good plan, because if he was able to buy back today at $5.95, then he increased his holdings, assuming he bought in with the same amount of money. Now, I don't want to take the risk of not having the shares, because to me, getting that distribution is paramount. I want to buy more shares. I want to compound. I want to keep dripping them divvies so that Gag and I can buy our Pall Malls and cheap vodka. All right. I want to live out retirement sipping and smoking. All right. So I just want more shares, because in 5-6 years, whenever I decide that I want to start spending that money, I want a big old distribution. I want a big old fatty distribution so I can continue to drive new cars and live in a nice house and everything after I'm retired, without having to stress out and wonder where the money's going to come from to pay for these inflated groceries and inflated energy bills. All right, because those things keep going up. So if you think you can barely retire, you really can't retire. I mean, that's basically the bottom line, because next year, that barely retiring today ain't going to be working unless you've got investments that are outpacing inflation and you can keep earning more income. Okay, so right now, let's say you have $15,000 in Ulti, assuming it does have a relatively stable NAV and it continues with the same exact distribution rate for the next 6 years. In 6 to 8 years, you could have somewhere between $600,000 and $1.3 million. Now, if you're getting an 80% distribution on $600,000, what's that going to be? Quick math here, $480,000. So on $480,000, you use what you need to live on, and then you reinvest the rest either back into Ulti or into another index fund or whatever it is that you feel safe doing at the time. And then that portion of your income will continue to grow and outpace inflation so that your income is always enough for you. So, you don't have to have, in my mind, if you think, oh, Ulti's going to do this forever, which I have my doubts because the assets under management are growing so fast. I don't know how they're going to have the liquidity to sell all the options that they need to when they have $20 billion in the fund. Oh, but maybe they can. I don't know. I haven't really done enough research, and I'm not real rock solid on my geology, so I can't figure that math out. Okay, but assuming they can continue to pay the same distribution rate, you don't have to invest that much to have a tremendous income in 5 to 10 years. If you're young and you're doing this, if you're 20 and this stuff continues to pay the way that it's paying and you play your cards right, you could be literally retired in your mid-20s. And you don't even have to start out with that much money. My kid is 11. I have an 11-year-old. I already put some money in Ulti for him. I'm going to put more in there because if by chance I have won the lottery of investments, okay, and it continues to pay out the way that it is, that kid may never have to have a job. Okay, he could have his own little business. He could volunteer. He could just do investing on his own. He could. My whole life, I've been working for money. The jobs that I've had, I haven't ever got to do anything that I really loved just because I loved it. Because the things that you love to do typically don't pay all that much, all right? But if you've got this huge base of income that I'm going to try to build for him, now he can do what he wants to do. He could do what he's attracted to. He could do just something that fulfills him. I don't want him to be just lazy and not doing nothing, but I want him to be fulfilled. And I don't want him to have to worry about where his money's coming from. So if I could get him set up so that he just has a base income that's going to cover his necessities, that's going to cover his house, going to pay for his family's needs, then he can go out and he can be a pastor at a church, or he can go out and he can be an artist, or he could do whatever he wants to do because that income is not what's going to have to drive him. And so that's the same thing I want for myself in retirement. I don't want to retire and then 2 years later be like, man, this really ain't cutting it. I got to go back to, I got to go be a greeter at Walmart or whatever, get smacked on the head with a bottle of alcohol because some hoodlum tries to steal a bunch of stuff at Walmart. That's what happened. I know that sounded random, but that's what happened in the city I used to live in. One of the Walmart greeters was asking the guy for his receipt, and he just smashed a bottle of alcohol over his head and ran out. Okay? So I know it sounded random, but it wasn't random. It was something that I heard of happening. I don't want to have to do that. I don't want to have to be like, oh, I got to go to work at the auto parts store or whatever. I'm an old man and I'm just hobbling around because I don't have any income. So I'm trying to set myself up with some income to supplement the retirement plan that I already have. And this is the way that I'm hoping to do it. And so I'm plowing more money in. I'm lowering my cost average on down days like today. I'm reinvesting and buying myself more shares to increase that distribution because I don't need any money right now. I got plenty of money right now, okay? But I don't have plenty of money in 10 years. I don't have plenty of money in 8 years. But I will if this investment pays off the way that I hope that it does, and I hope it pays off for you too.